Earnings report Meta down as well.
They did raise their
Let's see,
non-handset
Qualcomm.
revenue target for fiscal 2029, though, up to $40 billion. That's up from $22 billion in 2024.
Yes, put in comments.
Driven largely by a new data center
I hope you
goal
took
of
profit.
more than $15 billion. But again, not another great report here. We're down 4%, Alex, as we take a look across these numbers, an inline EPS and just an ever so slight beat on that revenue number.
Yeah, when I look at this particular report, I think the big story here continues to be input costs for many of the names, and you see that reflected in EPS being in line, but also their fourth quarter guide for EPS being below the estimates. So it's going to disappoint the street, but when you look through sort of the
EPS below,
commentary that's
revenue
included
below.
within the press release, one thing that stuck out to me, and I think it's important to realize if you're an investor and you still generally believe in the product and the role that this company plays, I'll read the quote. We are taking concrete actions to reflect the higher input costs in our product pricing and expect these actions to benefit our gross margins over time as pricing changes gradually come into effect. So they're having a near-term impact to margins, but they do plan to slowly start to pass this on to their end consumer, which will improve the margin story. So it's not reflected in this report. It's not reflected in the current quarter guidance, but it would be reflected in the long-run outlook for this company. So the disappointing aspects of what Qualcomm reported are simply near-term stories if you believe the company's vision.
Yeah, a better than expected top line, bottom line, though, right in line with the expectation. Though, want to shift over here to Lam Research. Lam is moving higher. We're up almost 8% as we look across these numbers here. As we look at EPS for what is their fiscal fourth quarter, EPS coming in at $1.82, $1.70 was the expectation here. Fourth quarter at $6.72 billion. That's better than the $6.68 the street was looking for here. So we're seeing a nice move here in Lam, really nice move to the upside. Their gross margins coming in at 52%. That was above the 50.5 estimate the street was looking for, also up from a year ago where we were at 50.3. Their customer support related revenue came in at $2.47 billion. That's up 43% year over year.
Yes, subscribe, give like to this video. Let's see Lam Research.
$2.15 billion estimate. Systems revenue of $4.25 billion, just slightly missed the estimate here. CEO Tim Archer saying that Lam delivered record revenue, operating margin, and EPS in the June quarter, driven by AI demand, reshaping the semiconductor industry, and expects a third consecutive year of outperformance in 2026. As far as their outlook, Lam Research is guiding to adjusted EPS of $2.15 plus or minus 15 cents, which is well above the consensus looking for $1.83, and their revenue guide is $8.1 billion, plus or minus 400 million, which is significantly above the $7.09 billion.
You see, Lam Research
so
is
we've
up.
got a beat on the top and the bottom line. We've got a raised outlook here. Alex, what are your thoughts on Lam?
Yeah, my thoughts are it's kind of the same story that we heard from KLA, if I'm being honest, but it's easier to be the second name in sort of the order to report, and so they basically undo some of the disappointment that they saw today, and they're kind of back to almost the unchanged line.
Yes, it was long time down.
Yesterday. So
yes, subscribe, give like to this video. Put in comments. Did you invest? Chat is open. Yes.
That's been the biggest question for so many of these names, which is, okay, great, out the gate, positive reaction for some. Does it hold? I mean, and you saw it with Bloom Energy today, wasn't able to hold it. You saw it with, countless names in recent weeks. So far, so good. Let's see where it closes tomorrow.
An interesting comparison to KLA Corp, as they ended the day down almost 11%, but Lam is up 6.6%.
Yes,
Microsoft came out a little bit early, so we're going to jump over to Microsoft next. They are seeing a 3% move to the upside here. As we look across, EPS of $4.74, that's beating the estimate, looking for about $4.25. I beat it by about 12%. It's up 23% year over year. Revenue for the quarter coming in at $90.01 billion. That also bested expectations there. It's up 18% year over year. Operating income in the quarter coming in at $40.6 billion. That's above the $39.02 billion estimate. They also returned $10.2 billion to shareholders via dividends and buybacks in Q4. As we look at their cloud strength, Azure and other cloud services revenue grew 43% ex-FX. That's well above the 39.6% estimate. Azure revenue surpassed $100 billion for the first time as well. Their cloud revenue totaled $59.3 billion. That beat the estimates looking for 58.71. Intelligent cloud revenue coming in at 39.31 billion. Estimate looking for 38.17. So we've got another beat there. As we look at 365 commercial cloud revenue, that's up 16%. Consumer cloud, 365 consumer cloud revenue is 24% higher in the quarter. Copilot reaching more than 30 million paid seats, they're saying as well. They're also saying they recorded a $3.2 billion gain from their investment in Anthropic in Q4, and their OpenAI investment had a negative impact of 7 cents in the quarter here. As we look across the CapEx, of course, which is very important, $35.8 billion. The estimate was 35.22, so just a hair
Yes, subscribe, give like to this video.
The CapEx was including leases was $41
And Microsoft
billion.
is good.
That's slightly
Good report.
below the $42.05 billion expectation. So CapEx overall was a little bit higher than the expectation, but the lease inclusion expectation a little bit lower. So a bit mixed there. Also, their personal computing revenue fell by 4%, Alex, to $12.9 billion. Windows OEM and devices revenue down 7%, and Xbox content and services revenue down about 10% for some weak spots, perhaps, that the street may be looking at. But as I look down just to track the market action since reporting the numbers, we are reversing course. We're still positive, but not by a lot. So what are your takeaways here?
Yeah, it's too early to say for sure, where this one will ultimately end up. They provide a little bit more information on the call, notably guidance figures to the extent that they give them. What I'm really watching is the relationship between the movement you're seeing in Meta and the movement you're seeing in Microsoft. To give kind of context when I'm looking, every dollar in Meta is $2.5 billion roughly. Every dollar in Microsoft is $7.5 billion roughly. So as long as the market can largely fight those two to a draw, it's going to be a lot better. Now, if they both start solidifying in the same direction, you can get a big move. But of course, if you see them move to the downside, we could really see things start to unravel here a bit. So far, so good as they're sort of fighting to a draw.
Let's see here.
And Alex, as you think about the questions on the call, of course, Microsoft doesn't do its guidance until the call. So obviously that will be top of mind. What are the other questions here as you sort of parse through the numbers? What would your questions be outside of the forward-looking picture?
Yeah, I think that there's I guess it's not really questions, but I would say the
You
things
see
that
what
are
happened.
impressive is the 30 million paid seats for Copilot.
Yes, subscribe,
So that
give
really
like to this
shows
video.
that Microsoft's able to kind of flex its corporate relationship and focus on sort of more, closed-end security systems when it comes to AI. And, big corporations, if they're going to roll out some of these features for their employees, they're going to want to do so in a really safe, moderated way. Copilot may not be the best, it may not be the fastest, it may not be the most innovative, but in many ways it is what these companies are looking for, and it's with a company in Microsoft that they trust. So I think the 30 million paid seats is pretty impressive because, when you talk about Gemini, or you talk about Claude, or you talk about Grok, or any of these, so many of those different features are not paid. So this is true revenue that Microsoft is receiving for these AI platforms. They beat on revenue. Their Azure and other cloud revenue continues to extend 43% growth. I mean, if we weren't in a risk-off period, this is a extremely impressive report.
It certainly is, and I'd love to draw.
But
a
why
comparison
Microsoft
quick
is
before we
down?
Take a look at
You see?
Starbucks, which is having a nice pop to the upside too. To take a look at the cloud conversation around Alphabet, because you mentioned, highlighted the growth here. Alphabet saw growth in its Google Cloud, an 82% surge in revenue. Yet we were met with a negative reaction.
Google
likely
335
not because of that figure, but
aftermarket.
as you look at them sort of side by side, how are they stacking up against each other? And then of course tomorrow we'll get AWS from Amazon.
Yeah, Microsoft's not spending to the same amount that Alphabet is, and you still see a very positive free cash flow number.
Yes,
for this
Microsoft
company.
is down
So
right now. It was
it's going
up
to
and
be
then down.
held to the same sort of scrutiny, but it's passing that test right now. So it's getting worse. I mean, this is a company that had $32 billion worth of free cash flow on an adjusted basis last quarter. It's down to 21-ish billion, but that number was negative for Alphabet, and so. Both these companies, Meta included as well, need to be able to justify the spending. I think it's a little bit easier for Microsoft, one, because they haven't bled their entire free cash flow, but they can say, hey, we have 30 million people paying for this stuff that we're building. I don't know if the other companies can say that yet.
Yeah, certainly that number is very important for them as they look across that co-pilot number. But as I mentioned, I want to jump to Starbucks here because
Let's
we
see
are seeing
Starbucks.
a nice pop in Starbucks here. I'm just going to do a refresh to give it to you correctly. We are up almost 7% for Starbucks as we take a look across these numbers here. Their fiscal third quarter EPS of 85 cents, up 70% year over year, beat the expectation for 66 cents. Revenue coming in at $9.32 billion, above the 9.17 the street was
Starbucks
looking
is
for,
up.
down slightly from the year earlier period. Comp sales, though, up 7.9%. That's well above the 5.7% estimate. That marks the fourth straight quarter of comparable sales growth. Of course, they're in the middle of this turnaround plan, so that metric very important.
Did you invest in Starbucks? Put in comments.
14.4%. That's above the 11.9% estimate.
Wow, Starbucks
they
are up.
also raised their full year guidance. Their EPS guidance to 255 to 265, now up from 225 to 245. The street was looking for about 240, so they're completely above that now in their new range. Fiscal year U.S. comp sales growth expected of at least 6%. The estimate was looking for 5.3. Global comp sales growth nearing 6%. They're looking for an adjusted operating margin for the fiscal year above 11%. Consolidated net revenue seen flat to slight growth year over year. And for this fourth quarter, they're seeing U.S. comp sales of at least 6.5%. That's well above the 4.8 the street was looking for. They're also maintaining their quarterly dividend. So I mean, a lot of questions swirling about the turnaround plan for Starbucks, but up 8%.
Put in chat, what stuff did you
They've
buy?
had growth on
How
their
much
comp
money did
sales
you
front
make?
now for the fourth straight quarter, Alex.
Yeah, I was going to say the questions around the turnaround, I think, are a lot less. I think this is about as straightforward. Look, if this stock somehow ends up down tomorrow, I don't think it's because of these earnings. I'm just going to say that.
Earnings is good, yes. So subscribe, give like to this video. And if you took profits, say in comments in chat, okay? See you.
To say, hey, is this turnaround working? Is in
Because
this report.
a lot of
They have comp sales
memory
growth
chips
of
are
almost
down. Yes, subscribe,
8%,
give like, that's
in
what I
the
told you.
US. They have better
If you
than
can,
expected
take profit.
in improving international comp store sales. Well, we know China's been an issue, and so it's hard to
Starbucks is
fix
up.
that problem. Well, it starts with beating the numbers and having positive numbers. So very strong there. But most importantly, they're doing
Microsoft
so in
still
the way
sideways.
that the new leadership said they were going to, which was by simplifying things so that they could juice the margins. Well, beating the margins, when you're a company that operates at this
Starbucks is
scale,
up.
I don't think we should undersell. 2.5% adjusted operating margin is massive. This is a huge
Let's see
difference.
Meta.
And it's why you see the estimate for adjusted EPS at 65 cents is at 85 cents. This is as straightforward
Meta
as
is
a report.
down.
Combine that with positive
Wow.
in terms of guidance that is suggesting the story is going to remain and it's continuing to improve. This is as straightforward as any of these that we've talked about in the last month.
All right, we promised you 6 earnings, though. With 6 earnings, we will give you. So we've got ARM Holding coming up last here. They were down. They reversed course
Let's
here.
say
They're
Google.
up marginally, about 1/3% here. So let's walk through these numbers. Their EPS coming in at 45 cents. That's about a nickel better than the expectation here, up 28.6% year over year. Revenue coming in at $1.29 billion. That's up 22% year over year. Also beating the expectation just barely. It was looking for $1.26 billion.
Too bad.
Also a record first quarter for total revenue for the company. Their
Google
annualized contract value for Q1 was $1.73
We'll see tomorrow
billion,
what can happen, okay?
also above
Subscribe,
the
give like.
expectation, looking for
See you next
$1.6
week.
billion.